Alrighty guys, welcome to a new video, and this one is for you guys. You voted for this on the screen here. Every single week I'm going to do an in-depth guide or an in-depth review into a days of price action, and you guys actually voted for Thursday here. So in Australia, Thursday's price action, I'll include the Asian session too at the start. We've got all this price action here and then all this price action here leading into the New York session. I'll even do the PM session too, because I think Thursday has multiple good examples of how I'll trade macros, but overall just basic market structure elements. If you're new here guys, before we get into it, my name is Ruben and I've been trading the NASDAQ and futures roughly for about 1.5 to 2 years, since May 2023. If you like this video guys, leave me a comment below, leave a like, and if you're not yet subscribed, hit that button. But let's get straight into the video, right? There's going to be very minimal cuts here. Let's get straight into the video. Let's start with the Asian session. Let's start with what actually happened there. And here's the thing I want to point out. If you are an Asian session trader, you have to take into consideration what has happened on the previous day. How has the PM session closed? Now for me, I class the Asian session as 7 o'clock until 12 o'clock. So for me, I'm going to label that with 2 lines. Some people class it as 8 till 12. Other people class it as 6 till 12. This is just what works for me. Again, do what works for you. And ICT, from what I watched, does exactly the same thing here. So that's the Asian session, but what's happened before the session? We need to discuss that first. Now, the funny thing is, and it's quite interesting, that is low resistance, right? We have low resistance buy side liquidity, which normally is something that I'd want to target, right? So we have this. And on the sell side, we also have low resistance sell side. Now, at this point when the market opens, how do we open? That's the question you got to ask yourself. How do we open? What do we do in the first, 30 minutes, 40 minutes? And what actually happens here, you can see you've got the 6 o'clock candle somewhere over here. Price comes down and we sweep this level of sell side. And after doing so, we move up and up and up and up. And it becomes a trending market, which makes sense. The market has shown us its hand by the time we're up here. It's telling us that, look, we're probably going to move to the buy side first. So maybe that's the liquidity that we want to target. That's really important to keep in mind. Now you have to zoom out a little bit more. You can't just stick onto the 1 minute chart. You have to go a little bit higher. And let me just go back here and show you guys 2 time frames. We're going to go to the 5 minute chart and then also the 15-minute chart. Now here's the 5 minute chart. Notice that where my cursor is, if I get up this demonstration, where my cursor is up here, this is all liquidity, but there's no fair value gaps here. Right, let's go to the 15-minute chart and we'll talk about this. There's no fair value gaps. When there are no fair value gaps, this is when I use premium and discount. Simple as that, right? Now, where am I drawing, premium and discount from? Where's the range that I'm looking at? Well, for me, there's quite an obvious range here. And I'm going to mark it out for you guys. So from this swing high to this swing low, that is the range. And what I'm going to do here is mark out a few things just to simplify it. 0, 1, and the halfway point. Now to make it nice and simple, when we create this range, you can see when we're at the halfway point, it's kind of tricky, right? When we push above that, we might want to push up into a level of premium. But you can see here, it's like a wedge. Like we're generating liquidity on both sides of the market. I don't really like to trade that ideally, but some people, yes, they caught really good trend continuations. We can discuss it. So ultimately, when we're above 0.5, we look for sells. When we are below, we look for buys. And it just depends on what your narrative is in that situation. You can see that here. So if I mark this out, then this will be, say, in a red area. Anything up here, if you see a setup, if you see something that makes sense to you, there's a higher chance of the market reversing back down. If the market is down here, there's a higher chance of the market pushing back up. Again, the market moves from premium to discount. Cool. First thing, write that down. Second thing, a lot of people ask, how do I approach trending market conditions? And I don't really like when the market is just moving in one direction like this. I'll wait for the pullback. So I know plenty of people that entered using, trend continuation models after seeing this sweep of sell side and a reaction from that. Again, that there is a macro, right? The first macro of the Asian session. We've got the price point from 650 all the way until 710. That there is the macro, and you can see what happens in that macro. Beautiful. We move, we take out buy side, happy days. So that is a really good trade. If you took that, congratulations. But there's going to be multiple opportunities throughout the day. If we just play this out, have a look at what happens in the next macro or around that next macro period. Now, by this point, guys, if you haven't taken this long position, in my opinion, you're too late. I don't like to chase price. I never suggest anyone chase price because, again, when we are this high up in the range, we'd rather look for sells. I know there is low resistance and price could come and sweep that, but it becomes riskier to look for buys when we are in a level of deep premium. And you can see here, right, this area where we're currently sitting has held price as some kind of resistance. It's not that favorable to look for longs anymore, right? What's the market do from this point? It starts to pivot to the downside. We have the pivot up here, right? And we react from this fair value gap that I'll mark out right here. All right, so react from a fair value gap, which is fine. And then we start to move back to the downside. Now, in these situations, a lot of people go, well, I'm still looking for longs. And there's nothing wrong with that necessarily. But just keep in mind, if you're in a level of premium of a bigger range, the highest probability trades are going to be shorts. If you are in a level of discount, then the highest probability of trades are going to be longs, right? So in terms of the Asian session, in my opinion, the best longs come from there and the best shorts actually come from over here somewhere. Now this is the macro, right? The macro is here. The macro pivots. So if we mark out the macro from 750, which is here, up until 810, you can see how that macro offers the turning point. So at this point in time, if you see there's reversal signatures, you can then trade towards any of these sell side points. This one, this one, this one, inside these fair value gaps, whatever it might be, right? And that's as simple as it needs to be. It doesn't have to be overly complex in nature. That's all I do. I look for price points where the market can pivot or reverse during a key time frame. Look for the entry model that you like. Happy days, move on. Now at this point, we're moving into the end of the Asian session, right? Because this black line is the 12 o'clock line and 12 o'clock is the end. So at this point in time, if you haven't taken a trade yet, there's no rush with it, right? But what are we sitting in? We're sitting in a level of discount. Now, as price kind of plays out, if you zoom in a little bit, you can see we've got a macro around the midnight period, right? This is called the midnight macro that I call it. And sometimes this will offer opportunities. Not always, but sometimes. Now you got to ask yourself this. Midnight happens, but do we invert any significant fair value gaps? No. What's price do to this bearish gap? What's price do to that? It respects it. And then after respecting it, it goes down. Could some people take shorts from here? Yes. But if you're not looking for shorts, you have to be patient and wait. Where are we now? Look in the range, right? If I remove all this, look in the range. We are now in a deep level of discount, the bottom portion, a deep level of discount. Make it nice and simple for yourself, and this will eliminate a lot of silly losses in your trading. We play this out. We're in a deep, deep level of discount. Price could come and sweep this low. It could. And if it does, we can look for a reaction. But if it doesn't, and then we have reversal signatures with a clear draw on liquidity, we can always look for reversal patterns when price starts to move. And this is exactly what happened here, which I talked through with my Discord. It's a very atypical situation, and write this down. It's called a rejection block. You might have heard ICT talking about it, but it's pretty simple, the analogy. Now, if I was to draw this out, see this swing low. I'm going to remove this, this for a second. I'm going to remove this for a second. And typically, you'd want that swing low to be swept. Of course, right? You want this to be swept. A lot of people are saying, oh, there's equal lows. It has to trade towards equal lows. Not always. Not always, right? And one of the reasons when it doesn't have to is when price actually sweeps, sweeps the body of the last candle. So I'm going to draw out like a vertical ray, or horizontal ray, I should say, across like this. I'm going to make that red. And if we zoom across now, you're going to see, look what price does. This light red line is the body, and this is the bottom of the wick. It uses the wick like a fair value gap. But Ruben, how do I know it's going to use it like a gap? You don't need to know. You need to watch the reaction after sweeping to see if there's some impulse after sweeping. And we do get that. We get the impulse. Look, we're moving down, 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 down. There's no impulse to the upside. We finally get some impulse. To me, price is quite bullish. And then you look in the macro for an entry. This is the London session, by the way. London session. So again, where is the macro? The macro is coming up at 250. We'll make this a little bit thinner. And we've got 310, which is right there. Guess what? 5 minutes before, 5 minutes after, who cares? You can still use the macro that way. You don't have to be too rigid in terms of when you can enter, when you can't. I like entries up here. Right, I'm going to make this a little bit thicker and darker. I personally like entries from this inversion gap, like that. Boom, stop below the bodies, stop below this wick or this order block, and target, a 1-to-1, 1-to-1.5, go to break even. That's it. That's it. That's your trade done. You don't need to capture the whole move. Price comes back and it offers another opportunity for people that still haven't been involved in the move. And this happens also within the macro period. And then price starts to spool back to the upside. So you have to have, this is the really important thing in trading, guys. You have to have some kind of, resilience and some kind of flexibility in the market as to what you're looking for. You have to be able to go, look, this is the ideal situation. But even for me, guys, as a trader, for you as a traders, you cannot predict the market. I cannot predict the market. So instead of trying to predict exactly what should happen, have an idea and anticipate something. But if that doesn't come to life, be open and flexible as long as all your other rules are followed. And this is an example of that. Did I want that low to be swept? Yes. Was it swept? No. So as soon as we had impulse from that low, I was interested in the market because we've been stepping down for so long and because we had a lot of liquidity to target. It's reasonable if the market goes down. Look how many handles we've gone down. Look at this. We've gone down all the way. If I get this up, we've gone down all the way from up here in the Asian session to here. We've gone down 300 handles. Am I really going to short after the market's gone down 300 handles? No way. That's just not how I roll. It's not what I do. So I'm looking for longs and I'm looking for reactions from price points. This is a previous day low or previous session low. We react from the rejection block and then happy days, we move up. And what happens? We find some kind of support. Again, London Open session's quite choppy. A lot of people have messaged me about this, and it's true. If you have a large range session before the session you're trading, the market can do one or two things. It can go into chop or it can reverse, right? So in this case, you see this 300 handle move from the Asian session. Are you really expecting a big move in London session in the next couple of hours? Probably not. So more than likely, you should scout the market and then take money up quick. But the narrative's still correct. We still move up and we still give ourselves opportunities to move higher. That there is the London session. Now, if you're still here, guys, leave me a comment below. Just write ICT macros. I appreciate all the support in these videos. And if you like this format, let me know. I really enjoy making these recaps and these reviews because they're just as informative, in my opinion, as making another typical video. I want things to be realistic, either from what you guys ask me to make in terms of, daily reviews or even trades that I take. So from now on, a lot of my YouTube videos are going to be focused on either trades I take, going for an in-depth breakthrough into the trade or breakdown. And in this case here, we're just doing like a daily review for you guys too. Cool. Now, what about the New York session? Because people are curious about that too. Let's have a look at the New York session. Now, again, what do you need to keep in mind? If you're trading the New York session, most people say, okay, 9:30 is the open. And by the way, my times, have a look down the bottom here. New York time. I'm from Australia. I still set it to New York. Now, if that's where the market opens, right, for New York session, you need to have a look at what's happened before. Where has price reacted from? What has price done? What liquidity has price left? And we know now that the market has left. What has it left? Low, 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 low. It's left those lows from the London session. Important. And also, where has price reacted from? Again, let's draw out a range so you guys can see. Have a look. If I go to, let me just go back in time. Right here. At open. And let's go to a slightly higher time frame. Let's maybe say the 15-minute chart. And let's mark out the previous range. Because you can see what price has done, right? We don't really want to go higher than this point. We've come up again, we've tried, we've rejected from that area again. And here we can draw a Fibonacci from high to low. You can see we've reacted from a level of premium. So anything up here is good for sells. That's it. Keep it simple. Just keep it very simple. Doesn't matter how big the range is. It's just on the 15-minute chart, right? Now, coming into this, these are your draws. Like, all these London lows and this low, these become your draws, and this low also too. They're all relatively equal. Yes, you have relatively equal highs here at the top, but an important point that I want to mention is let's go to the ES chart and let's discuss the concept of SMT. So let's go back ES and let's have a look now. Where are we on this time frame? just so you can see, I think this is the same time, yeah, here. And we'll talk more about this in a second, right? But what I want you guys to have a look at is here, right? Have a look here. It might not seem significant, but it does become significant as time goes on. These two highs on ES were forming higher highs, were forming lower highs here. There's SMT at some of these highs. They don't have to be swept right away. And we know the market has been extremely bearish, even just zooming out. Look, extremely bearish. So it's reasonable. It's reasonable in this area that price can move down. And it's reasonable that the market may want to target some of those lows. It's reasonable. And reasonability in trading is a big part of how I trade. What's reasonable? Where can the market react from? Cool. Now, going back to the 1 minute chart, we're looking for sells in this area. Let's play it out. Let's talk about it, all right? Now, obviously, the market drops. It drops, sweeps some of that low, sweeps all those lows too. And here, people are saying to me, Ruben, what do I do here? Like, how do I navigate this? Well, if you hadn't traded already to these lows, if you hadn't found an entry model here, maybe from this inversion gap that's created, let me just remove all this. Let me make this a little bit darker. If you didn't take a short from here, which is no problem if you didn't, but if you didn't take a short from here, after price swept that high and reacted back down, then guess what you're looking for? Longs, because price now has swept time-based liquidity. It's swept London lows, it's swept all these lows. It's reasonable for the market to reprice a little bit higher. And back to what we had before, that dealing range that we marked out, we've now broken outside of that dealing range. We've taken out that same day's London session. We've taken out the previous day's London session. We've taken out previous day liquidity. We expect a quick move and simply wait for the macro. We have a nice inversion gap here. The macro marks out, 950 to 1010. Give or take, that's 950, and then 1010 is there. How do you enter? Something similar to this. Stop below the bodies or the wick. I think the bodies is sufficient here or somewhere around there. And target a 1-to-1, 1-to-2, whatever you need to, and be done with it. Be done with it. That is the A+ trade for the New York session. And if you miss that, you got to accept, or in my eyes, I have to accept in that situation, look, I've missed the trade. And that was the A+ model. And notice how there was multiple opportunities to take advantage of. Rather than coming into PM session, obviously we just chop around. I don't think anything in PM session is worth touching. This is all right here. Right, this is all right here because we have a macro reversal. You can see that here. So that's 150 to 210. And you can see here we come down, we sweep this sell side like that. So we mark that out. We come up, we trade back down, we come up. There's some nice entries here on this candle, this impulsive candle like that. Right, stop below these bodies, target what you need. I think that's also a good trade in the PM session. So PM has two, it has this one and then this one here. But there's more to it depending on what your narrative is on that particular situation, on that particular day. And keep in mind, guys, with all these setups, right? Once you've taken a winning trade, that should be it. That should be it. You shouldn't be pushing your edge and trying to come back and, aim for more and more and more and more. That should be it, right? So if you trade all sessions and you've taken a trade in Asia, you're done, or London, you're done, or New York, you're done, or PM session, you're done here. Could you have taken shorts from up here in the next macro? Of course you could have. You come up, you sweep these highs, and then a lot of people maybe go for shorts somewhere around here from this inversion gap. That is fine. That's completely permissible. There's nothing wrong with that. Or maybe you don't like that, and so you go for longs in the end of day macro here. So this is from 350 to 410. Notice how with ICT macros, guys, there are so many opportunities to trade the market, which can be a good and a bad thing. Just take a look at these three macros. These three macros in the PM session, right? Long opportunity, like we said, from here. 1 to 1.5, done. Short opportunity from here, if you miss that, depending on your narrative, depending on what you want to see, that's there. Short position can come from here. Stop above the body, take what you need. But you still missed out. You still missed out and you want to take a trade. There's another opportunity right here. We sweep below, we react, we push higher. Now you're going to see patterns here, repeat. I've made videos on this time and time again. It can be this easy, but it doesn't necessarily mean that you have to trade every macro. That's not what I'm trying to say here at all. But this illustrates how many opportunities throughout the day the macros actually have. How many opportunities do we have here, guys? How many opportunities throughout the whole day? Looking back, even into the Asian session, we talked about one opportunity here. That's 1, 2, right? What else do we have? What else do we talk about? 1, 2, 3, 4, 5, 6, 7 throughout the whole day. Not every macro is going to work. Not every macro is going to be tradable, but there will be multiple opportunities if you're looking hard enough and if you're following a repeatable process or strategy. What I do for risk reward is not what you have to do. It's just what I recommend for myself. But again, you're going to find your way in the markets. I hope this video has been very informative. This is how I trade ICT macros. Again, in all these situations, you can see the macro actually pivots. If you like this video, guys, leave a comment below, and I'm going to do these videos once a week. You guys will decide at the end of the week which day I review. With that being said, guys, I hope you've enjoyed this video, and we'll talk very soon. Have a great weekend and have a great week. We'll talk soon.